Multiple trading halts in stock of Chesapeake Energy. That's one of Real Money's stressed out stocks. Real Money writer and analyst Carleton English joins me now. Carleton, what a fascinating day for Chesapeake. Bankruptcy fears really gripping the stock. Company saying it has no plans to file, but the market looks skeptical.
Indeed, the market is very skeptical. So a lot of this talk originated, I would say, Friday night. There was talk of Chesapeake hiring outside advisors. So that went into Monday morning's trading as well. So yeah, the market is skeptical. This is a company that has shed about 90% of its market cap over the last year. I hesitate mentioning prices just given today's volatility, but its debt load is about 9 times worth the market cap of the company right now. So and also it's worth mentioning that a lot of its notes are now trading for 50 cents on the dollar. They are rated CCC by Standard & Poor's. Investor worries are certainly warranted here.
So you've written a piece that there's a big debt payment due in just a couple of weeks. Is there cash to cover that?
Technically, there is cash to cover it. Now we're looking at numbers that were provided when the company released its third quarter earnings. So right now it has I shouldn't say right now. As of the third quarter, it had $1.8 billion in cash, but that cash also has to go to its, just daily operations. And also the company does have access to a $4 billion credit facility, which it has not drawn against. That's like a corporate credit card. So even though it's not a perfect comparison, think about household finance. Do you put your mortgage payment and your student loan payments on your credit card? If you do, that's a sign of trouble. So as of old numbers, yes, technically the company can meet that obligation, but it's looking tenuous.
So one thing that happened today was the company did put out a statement, and it said it has no plans to file, and it's seeking, quote, to maximize value for its shareholders. Obviously, that's not what's happening if you're a shareholder today. So what exactly are the options for maximizing value at this point?
I've heard reports that the company is exploring selling some assets. Now, they are in a weakened position, so you never want to be a weakened seller. So also you have to think about the broader energy space. Who's buying right now? Things that the company has done already, it's cut its common stock dividend. It's also cut the dividend on its preferred shares and is planning to use that to repurchase some debt. There have been production cuts, there have been all of these things. So the company just seems to keep chipping away at itself. So I'm not sure what other options it really has. It just really has to wait.
All right, well, we know you'll be all over this, Carleton English.
Yes.
Thanks so much. I'm Rhonda Schaffler for TheStreet.